Perfect. Hi, everybody. It is almost the end of the week. It's almost Friday. We made it. We're past tax season, which is why Rob is here with us and has the space to be able to meet with us today. So, if you don't know me, I'm the admin of this group. My name is Gabrielle. I grew my group practice. I sold it. Now I do consulting about all things business and mindset. And I have Rob from Healthy Coin here with me today, who I'm extremely excited for him to be here with us and to take his time to do this because he specializes in accounting and taxes for therapists. So that is his bread and butter. I have some questions that I want to ask him, but I know some folks were joining live. So if you've got questions, drop them below and we will make sure we get to them. And if you are watching the replay of this later, make sure you put hashtag replay so that we get tagged and we can come back and answer any of your questions for you. But I know money is a sensitive subject, especially taxes. It's not our favorite thing to talk about, but it is really necessary. So he has lots of insights to share with us. But I would love first, Rob, if you would just tell us a little bit about why therapists? Why did you decide on this niche? How'd you get here?
Yeah, that's a nice little softball question. Nice to meet all of y'all. Thanks for tuning in, and if you're watching this at a later date, appreciate you anyway. Um, why therapist? So honestly, I kind of fell into the niche, right? This vertical. A couple years ago, I started my own firm, and when you start up a firm, you can't be very selective. You have to kind of take everything that you get. And I had this joke with my mentor. I'm like, hey, if they can fog a mirror and they can pay my invoice, I'll take them as a client. Like, I'll pick up their dry cleaning. Hello. And that worked for a while. But then there's this thing called complexity tax. And then, like, you're jumping from one industry to the next. Like, on a Monday, I'm working with a global manufacturing company. And then the next day, it's a software company based in Austin. And the next day, it's a real estate holding group. It just there's so many changes in the conversations and the language. So I knew I had to pick one. And what I
Mhm.
did was I just looked at my little portfolio of clients and I didn't look at the ones that paid the most, right? I looked at the ones where the relationships were the strongest. And
Yeah.
I felt like there was just an overwhelming amount of opportunity in the space. I had a lot of knowledge that I could impart in that industry, and then it was just a really good feeling to know that you're partnering with people that have kind of been given the stiff arm from right the financial world, and also they don't really cover finances in y'all's grad school and your practicum, and no one tells you, hey, this is how tax works in a private practice. So I just felt like it made the most sense, and we're really happy we made this decision.
Yay. Oh my God, I love that so much. It makes sense that you had good relationships with your therapist clients because we're all about relationships. And they don't teach us anything about money and taxes and finance in grad school. And there is a huge need there too, because I know when I first started my private practice, my accountant and my bookkeeper, they knew nothing about the therapy world and I had to train them. I was like, this is what it means when we take insurance and this is how we get paid and these are the payments and it was kind of like I had to teach them even though I had no idea what I was doing at the time.
Right, which is kind of off-putting in a way, right? Like if you have to explain to the person that you're trusting to do your finances what a CPT code is
Yeah.
and what billing means, you're already starting like junk. you know, that's hard.
I mean, the fact that you even know what a CPT code is very impressive to me because not a lot of other people in different spaces do know that. So that's huge.
Got to, got to. It just makes the conversations way more interesting.
Yeah.
And I'm glad you said that too. Thank you for sharing that with me.
Yeah, of course. And I see we have some people watching live. I'm looking on my phone. So if you guys have questions, put them below. But I have lots of questions that I think would be helpful or that I hear a lot in my consulting sessions and even, growing my own group practice that were needed or helpful or things that we didn't really talk about. And I'm wondering, Rob, if you could tell us, like, what are maybe some common missteps or mistakes or things that get missed or that people don't really understand impact their business from your perspective?
Hmm. Mistakes?
Yeah, or maybe things that like just people don't realize or get missed. They're not aware of them.
Hmm. Okay. That's a long list.
I know, I figured it would be.
But I can pick a couple and kind of use that to start the conversation. So, um, I think the first part is tax, right? That's kind of why I'm here today. I think everyone knows subconsciously you got to pay a piece of what you make to the government, right? That's your American duty. You got to give them a little chunk. Um, but I think a lot of people wait until tax season to do that. And the right way to go about it is to make quarterly estimated tax deposits throughout the year, like 4 times a year. And when you do that, you're following the rules, right? Because there's a compliance rule that says that you have to deposit quarterly. The government doesn't want to wait till the end of the year, and
Mhm.
you don't want to wait till the end of the year as well, because like it's kind of hard to be saving 20-25% every single quarter, every single time you get paid. So it just makes it easier on both sides. And I think a lot of people forget that, or they
Yeah.
play dumb to it, or whatever the reason is. So just being mindful that that is the requirement keeps you in compliance, and then you're able to avoid a lot of fees and penalties as well. Probably the number two thing that I see um, people miss on the first few laps at business is how payroll really
Yeah.
works.
Yeah.
Okay, so like it's hard enough like hiring someone, right? You got to like get someone that's bought in, train them, show them the ropes, and then you let them fly and hope that they can take care of your business, your baby. It's hard. And then you add in this wrinkle of compensation, which is scary. And it's like,
Mhm.
how much do I pay? Is it
Yes.
split? Is it hourly? Is it fixed? Do I pay you in rice? Like what? It's like how do I can you just sleep here? Like it's crazy. So I think I think payroll is probably the number two thing that people get wrong for two reasons. One, not having a good and fair compensation model that they can
Mhm.
stand behind, or two, not accounting for all of the expenses associated with payroll.
Yeah.
Because it's not just like the number you say. And I'll give you an example, right? So let's say a clinician on my team and my group practice, their compensation is 48 grand per year. So
Mhm.
$4,000 per month. It would be easy to say, oh, well, just 4 grand's going to leave the bank account. That's going to go to them. Like, okay, I got it. I made six. No, no, that's not how it works, right? So the first problem is 4 grand is not going to go to them.
Yeah.
3 grand is going to go to them. So you're already at like a disconnect because they were like, I said, you said four, I got three, right? So they have their share of federal withholding, state withholding, their share of Social Security and Medicare, which we call FICA, maybe some voluntary deductions as well, but their net pay is going to be lower. Okay.
Mhm.
So we have to know that as business owners and leaders that their net pay, what they have to live off of, is that net figure.
Yeah.
But then it gets even trickier. So on our side, as a business owner, 4 grand doesn't leave our account either.
Mhm.
Ready? It's like 5 grand.
Yeah.
And if somebody's listening, they're like, okay, this dude, like, what? I'm spitting fat. Tell them I'm not lying, Gabrielle.
It's true because I remember when I had that realization the first time I ran payroll when I first started hiring, and I was like, this isn't what I thought it was going to be. It's more.
More, right? So you've got that $4,000 requirement, but then the government says you have to pay 6.2% for Social Security, 1.45% for Medicare, federal unemployment tax. It's kind of nominal. It's like
Mhm.
42 bucks per year per employee. But then a lot of states have state unemployment tax, which can
Mhm.
be a hefty portion as well. So when we're all said and done, right, we're looking at 8 to 10% of the salary that we have to pay out. Plus, not done yet, the payroll service fees. right? If you're
Yeah.
running a Gusto or a QuickBooks, they don't work for free. Hello. So we got to pay their fee. Um, and then I'm going to round it out with like any type of match you have in like a 401k or something.
Hmm.
So the sooner people can learn, like, okay, this is what payroll is going to cost the practice, the sooner they will be able to really understand their margins.
Yeah.
So tax and payroll, those are the big two.
That makes sense. And I think that I can imagine that that's a common like misstep or thing that gets missed because I see that with, I experience that and I see that with my consulting clients all the time. They're like, oh, I'm going to pay, a 70-30 split. And then they're like, I don't have any money because you're overpaying. You didn't realize that's why you need somebody like Rob who can run those numbers for you because you need to understand how much of that 30% or the 40% or whatever it is that's coming back to the practice, you need to know how much of that is actually going back out.
Right, right, exactly.
Let me see. There were some other questions I had about, well, one common question that I get all the time, and that you probably get too with your clients, is how do I know when I can hire and how much I can pay them? And this is very nuanced and unique, of course, because it's so like people will ask this question on a Facebook group and you can't get a correct answer because there's way too many little things that go into it. But are there some maybe like key indicators that you look at, or maybe some advice that you would give people who are in dealing with that right now?
That's a really good question. Um, and I'm going to preface by saying two things. One, I don't have a crystal ball.
Yeah.
I'm just a dude, a human that chose to practice accounting, became a licensed CPA, and I've worked with therapists for the last, I don't know, 6 years.
Mhm.
Um, so I don't have like, I'm not some secret sauce person, right? I'm just a dude. But number two, kind of like you alluded to, there are so many wrinkles to this,
Yeah.
so many nuances. So my answer may lend itself to be a little generic, but I'm going to give you some layers, right? And the
Yeah.
layers will help you kind of diagnose whether or not it's the right time for you and what that might quantify into in terms of the how much. So the question is, when do I know I'm ready to hire, and how much do I pay them? Classic. The first one, when you know it's time to hire, is I think there's four things I would look for. Number one, you have a true desire to lead a group practice.
Yes.
A lot of people think they do, and they aspire it because they see other people doing it. But until you've actually been a manager, had to cut someone else's payroll check, answer their questions, supervise them, it's not for everybody. Like, it's
Hmm.
actually, in a lot of ways, it's a crap job because you get all the responsibility, very little thank you, very little praise. In fact, you are the firefighter. It's your
Hmm.
job to put out fires. And for a lot of people, they ain't trying to deal with that. Some
Hmm.
people have that like teacher persona and I love helping and train. Perfect. That's you. Okay. So I think the number one thing is, do you have a general desire, like a real desire to be a leader in a group practice? Cool. So now we're getting closer. Number two, do you have any signs of pipeline growth or lead generation, sticky engagement model? Do you have like a bunch of people referring you constantly? Is your caseload fully booked out? Or it makes sense to bring someone in,
Yeah.
right? Because if you ain't got like, you're only seeing like four patients and no one's hitting you up, you got no leads for marketing. Why are you trying to hire? What are you going to give them to do? Draw you pictures? It's not going to work. So, do you have a genuine desire? Do you have a pipeline where it makes sense? And then number three, like, and I hate doing it this way, but like, kind of play the worst case scenario game,
Yeah.
right? Should I bring this person on and it not work after 3 months? Will it break my business, or will I be okay?
Hmm.
Right? And what I mean by that is, like, let's say you've got, you know, it's just you're seeing 22 clients per week, pretty utilized caseload, but you got some people on the wait list, and you're like, cool. I think I'm gonna bring someone on. You have to do that quick assessment of will we survive? Because if you've only got, I don't know, $800 in the bank account and you need to bring them on, it's going to take them a long time, not a long time, but a little bit amount of time to
Yeah.
build their caseload. So do you have enough cushion, enough margin to withstand maybe them, let's say they get sick on week 3. Are
Hmm.
you out? Like, do you have enough, margin? That's what I'll put.
Yeah.
That's the third. And then my number 4 is so we kind of do the worst case scenario and then we do the best case scenario. So like
Hmm.
the leading indicator is, should I bring this person on into my practice? What does that look like in terms of profitability and scale into the future? Because you can't just bring someone on to fill a void or to see patients. It has to be connected to a greater ROI, right? So if I'm thinking about hiring Gabrielle's going to be like, well, I'm kind of a big deal. I'm very expensive. And I'm going to say, respect. That's why I want you. Um, but if you tell me you're going to cost 120,
Hmm.
I have to be thinking Gabrielle's going to bring in at least 300
Yeah.
so that it makes financial sense.
Hmm.
Yes, you're awesome. Yes, you're amazing, super talented, but does it make good business sense?
Hmm.
Right? So that's kind of like my 4 little steps that I would use to decide, when we're ready to hire.
I would wholeheartedly agree with all four of those.
Nice. All right, now the tricky one. You ready?
Yes, this is the big one. Get some water.
Drink a little smoothie. Um, how much? How much? I'm a principles guy. All right,
Hmm.
I don't believe in this like tyrannical nonsense where you work people to death, you burn them out, give them peanuts to live off of.
Yeah.
That's too many places in our world use that methodology, and it honestly just pisses me off. So
Hmm.
I would never endorse someone abusing talent or using people, exploiting them. I think that's the best way to put it,
Yeah.
exploiting them. Um, but I do believe in the free enterprise system. And in a capitalistic structure, unless you choose to be a nonprofit, it is your fundamental responsibility to build that business.
Yeah.
And businesses are profitable. They have to be. So in that landscape, you have to understand that if the business isn't generating a profit, like if the net isn't realized, it's not a business.
Hmm.
It's a glorified side hustle. It's
Yep.
a hobby. It's a daycare if you want to call it that. You don't have a business. Businesses are profit generating machines. And I know some people may be listening like, "Ooh, that's kind of harsh." I know it sounds kind of, but we got to remove that stigma around profits being bad, right? Like, "Oh,
Hmm.
it's not sexy to talk." No, that's good. Profits are good. Profits are worth celebrating, right?
Yeah.
And no, you don't exploit people and abuse them. That's dirty. But making money is not bad.
Yeah.
And I want all my clients to be super duper wealthy. So, how much is dependent upon the goals of the founder and the type of how do I want to put this? The type of environment they can create with that goal in mind. So, a lot of times when clients choose to work with me, I say, okay, where do you want to be? Like, where are you at now, and where do you want to be financially? And they'll say, okay, I want to make 120 grand per year net
Hmm.
pocket. I'm like, okay, cool. So 10K a month, right? Yes. I'm like, okay, where are you at today? And then they'll tell me that number, and I'll say, okay, so we have a gap,
Yeah.
right? It has to be supplemented somewhere, right? And I'm kind of going off course a little bit, but I
Yeah.
use that as a starting block to figure out what needs to change because there's not many levers we can pull, right? We can increase revenue or lower cost.
Hmm.
What I mean, you can't steal it. You're not supposed to steal money. So those are our two options. So do we double down on marketing and advertising, try and scale the practice further? Maybe
Hmm.
command a stronger lead gen, work with an outsourced marketing group. Cool. Now we got more revenue flowing in. And then
Hmm.
with that, after we get the cost out, now we've got that profit you're shooting for. Or we take a pair of scissors to the P&L and we look at costs that don't make sense. Do we need that second location or can we get a sublease arrangement going? Do we need to Give everybody a new baseline. This is your new threshold. It's no longer comfortable for 15 sessions per week. Everyone, the requirement's 22, or else we're
Hmm.
going to put you on part-time and we're going to have to remove some benefits. That's cost, right? Using that type of, pragmatism really lends itself for you to know exactly how much you can pay people.
Yep.
All right. Now, the honest, generalized answer. Here we go. Let's say the goal is, we'll use the same number, 10,000.
Yeah.
Cool. Next step, what revenue can I conjure up with said resource? Revenue minus profit.
Yep.
Here's our expense. That is what we can afford to pay all in. So then we kind of dial back for the expenses like payroll tax and processing fees.
That's a
Does
great
that make
answer.
sense? It's
Yeah,
kind of wordy, but does that kind of make sense?
it makes sense to me.
All right. If anybody listening, you're like, oh my God, he's using so many words. Hit me up. We'll have a little fireside chat. But
Yeah.
that's generally what I'm trying to get at.
Because it's important. And I think a lot of us, I mean, not everybody, but a lot of us tend to be a little avoidant with the numbers, or we don't really understand what a P&L looks like or what it means or the things that we should be looking at from it. And the financial statements or your profit and loss statement from your business tells the story of your business and how healthy or not healthy it is. And so I know that we, or I know I used to, again, I can't speak for everybody, but I used to have a lot of fear about that. And I would be afraid. And I was like, I spend too much. Am I spending too much? But that's the problem is when you don't know, then you start to fill in the blanks and create those narratives, which just cause more problems on how you're running your practice. And you don't want that. And so it's not good or bad, but you just need to know so that you can make those informed decisions instead of just saying, oh, well, the person down the street pays their therapist $85 an hour, so I'm just going to do the same. Like, that's not how you need to, to make that very big and risky decision because it is a risk to start hiring people and you want to do the best that you can to make good choices where you can with the information that you have.
Yeah, 100%.
And that's why we have people like Rob. I think I wrote down some other questions. I know we've already been talking for like 30 minutes, but I have a couple more. Um, what are, when we're talking about profit margins and net profit and profit and loss statements, are there any like, and I know shoulds is a big word, but like, is there a percent where people should be who are running a practice or, um, again, like things that are important when they're looking at their P&L statements that maybe they wouldn't think of?
Hmm, that's a good question. In fact, yesterday someone asked me something very similar. So, um, hmm. Unfortunately, I can't give you like a benchmark statistic for like the profit that a practice should have because there's so many like
Yeah,
levels to it, right? Is it a
yeah,
group practice, solo practice? What's the demographic? Like where are they located? Private
yeah.
pay, insurance. So it's really hard to be like 32% is the ideal figure, all
Yes.
right? That's hard. But there is a lot of data floating out there, and I think that if you look around and you look at census data and you run a couple searches, you can figure out what the average is in your home state. And I tell people like it doesn't hurt to like map yourself up to them. Like
Yeah.
like why not? Like measure yourself up to the competition, see how you're doing, what can you change, what can you pivot. This is good information to have. But to the latter part of your question, I really love this, Gabrielle, because it gives me permission to nerd out a little bit. Right?
Yes, please do.
All right. So, and this is like we're getting crazy. There's there's profit, which is revenue minus expenses, and everyone loves that. Like, yay, I made more than I spent. Like,
Yes.
hey, right? Which is cool, right? That's the first part. But profit margin, like, is a percentage, which tells a way more compelling story,
Yeah.
right? Because it tells you like what is the percentage of revenue that you were able to keep?
Hmm.
And as the business makes more revenue, naturally, if you're not careful, the costs go up
Yes.
at a faster pace, right? So you're like, yeah, sorry, give me 1 second. I'm getting a note that my volume's really low. Can you hear me okay or no?
Yeah, I can hear you.
Yeah. How loud is it coming through?
It is kind of low, but I can hear you.
Let's see. Quick pause. Let me make sure. I want people to be able to hear this. Okay, let me know if this is better or worse.
That's real loud.
Okay, bring it back a little bit.
Yeah, that's good.
Okay. All right, quick pit stop. So, where was I going? Okay, profit margin. It's just a way more compelling metric because now we're dividing, right, the profit by the revenue. And it means like, okay, let's say our profit margin was 27% last month,
Mhm.
but now it is, now I'm too loud. Oh my gosh, I don't know what to do.
Who's telling you this, Raquel?
I don't know who's telling me this. Someone's sliding in here. I don't want to be too loud.
I think it's fine.
It's fine.
Yeah.
They're just being dramatic. I'll
I
tell
think it's
them
fine.
later.
People
What,
can turn the volume down or they can turn it up.
I like the way you think. Yes, much like a P&L. You can turn it up or you
Yes.
can turn it down. Yeah. Okay, let me finish off this thought because it's taking way too long. All right. The general point is if you're only looking at profit, you run the risk of like being bamboozled by a number that looks sexy, but it actually means you're not doing so hot. Because even if the profit goes up from 9,000 to 10,000, maybe your margin actually decreased, in which
Yeah.
case it means you're spending way too much money on things that aren't contributing to the health of the business.
Mhm.
So I like to tell people look at your profit and your margin percentage so that you have a clear understanding of how healthy the business is.
I love that advice. I think that's something that surprises people too as they grow. They're like, the profit margin sometimes is shrinking.
Can we play a game?
Yeah,
All right, let's play a game.
maybe.
So,
Does it involve math?
a
Because
little
that's
bit.
a strong suit.
Just
Okay.
a little bit, but it'll be fun. So sometimes people push back on this and they're like, I don't get it, it doesn't make sense. And I say, that's fair. So I'll give you the first prompt. All right.
Yeah.
Would you rather have revenue of 1 million or revenue of 100 million?
I think I would prefer 100 million, depending
Pause.
on the next part of this, which I
Yeah.
think I know what's coming
So you played this game before.
in my head.
Yeah. So normally people go 100 million.
Yeah.
And then I go, well, unfortunately, the expenses are 99.9 million,
Yep.
which means you end up with 100K net. And then I tell them the expenses on the first side is 10,000, so you have $990,000 of profit. So
Yeah.
you pick 10,000 over 990,000,
Yeah.
right? And they're like, "Oh." And then I leave them with this, and I'll share it with your community because I love you all so much. Um, a lot of times you can either have 100% of a grape or 10% of a watermelon.
Hmm.
And if you can wrap your head around that, now you understand the importance of profit margin.
Yeah. I love that.
Let's go.
We love analogies and metaphors. It makes it so much easier to understand and visualize it when you put it that way.
I know someone is like, okay, great. Okay, 10%. Oh, yeah, yeah, yeah. Watermelon. Got it. Right?
Exactly. It
Yeah.
puts it into perspective.
100%.
What else do you want to share quickly as we wrap up here? Anything that we missed or you think would be important for people to know?
Um, yeah. Okay. So, unbeknownst to you, when you decided to start a group practice, you also had a partner. You had an equitable partner in your business, and it's called the IRS.
Yeah.
Okay. Whether you like it or not, they have a vested interest in your business, and you might as well consider them a co-owner because every dollar you make, they want a piece of the action.
Yeah.
And I know if you guys have watched like Shark Tank or you've seen some of the shows or maybe you follow the stock market, right? There's this concept of equity, which means okay, the company made $3, okay, that has to be split up to the shareholders, the people that own it. The sooner you can come to grips that the IRS is like magically your partner in the business, the better it will be. Because then now you're not trying to play footsie and going, oh, I guess I don't think I have to pay taxes. Like I feel like I shouldn't have to. It don't matter. You have to.
Yeah.
But now that you understand you have to, it's your job to make sure that amount is as low as possible, legally and ethically, of course. But how can you screw over your partner without going to jail? Like that becomes the game, right? What are some deductions I can use to lower my taxable income,
Hmm.
keep more money for myself and my practice, and continue to grow and scale? Like that has to be the thought process. So if you're working with a CPA, I encourage you to reach out to them and ask them questions.
Yeah.
Can I do this? Should I do this? Those are really good launch pads. And that way you kind of save more of your hard-earned money.
Yeah. Which we love. We want to keep our money.
Hello? Yeah, it's hard enough out here. Ain't no dollar menu no more.
No, there's not. There really isn't. Inflation is a problem.
100%.
So tell people what Healthy Coin does and how they can connect with you if they are needing help with their practice and maybe are looking for a new accountant or some bookkeeping.
Cool. Cool, cool, cool. I should have led with that. I'm so sorry. But yeah, um, Healthy Coins, a boutique accounting firm. We work exclusively with therapists, wellness people, people that just make the world better. That's who we work best with. What do? We do accounting, bookkeeping, tax, payroll, consulting, reporting, cash flow, strategy, anything to deal with dollars and cents and how to make it a better situation for you. That's what we look to do. So, how can you get in touch with us? You can go to our website, healthycoin.net. We do our best to pump a lot of content out through Instagram, LinkedIn, and Facebook. But yeah, if you see something that's interesting, feel free to comment on a post. If you want to share it or reach out and slide in our DMs, as the cool kids say, feel free to do so. But yeah, reach out to us online if you're ready to have a conversation.
Perfect. This was so insightful as I knew that it would be. Thank you for taking the time. I know you're just coming off of tax season,
Yeah.
so I really appreciate it.
Yeah. Still in it in a lot of ways, but
Yeah.
not a lot left. But we still got a little bit to go.
Yeah, I get that for sure. Well, I appreciate your time and thank you so much for being a resource for therapists and group practice owners. And again, if anybody's watching the replay, hashtag replay below so we can come back and chat with you. And I will put the links for Healthy Coin as well if you want to get in touch with Rob.
Awesome.
Thank you.
Thank you.
Have a good day,
Bye.
Rob. Bye.